All right, that was fun. Recording this 30 minutes after the close Friday. Markets getting hammered on their worst session pretty much since the tariffs last year, 25, but a painful session for the indexes, for semiconductors, for a lot of the high flyers that have been working, everyone rushing for the exit door at once. Charts look terrible. Is that the top? Was that the top for 26 right here, right before SpaceX? We want to look through some charts today. We're going to try and answer that, try and position ourselves ahead of the almighty SpaceX IPO next week. I received a few texts today basically asking, why is the market down? Why is the market down today? And you know, honestly, the audacity of that question, given the fact that we have gone up 9 weeks in a row here, relentlessly in the S&P 500, in pick your index, it has been a flotation higher uninterrupted. And so, yes, we finally, after 9 weeks, we did get a correction. It came swift, as one might expect, but really, we don't need a whole lot of other rationale to try and figure out why the market went down when you've gone up so much. I mean, it's, you know, what's the leading cause of a pullback? It's when you've gone up quite a bit, and it's almost vice versa on the way down. But let's go through the exercise. Let's look at what maybe made the market a little anxious this week. All right. So Alphabet came out with, if you recall, a few months ago, they raised through debt, I believe, like 30 billion. They're back at it this week with an $80 billion offering, some ATM offering, some placement with institutions. Point is, a hell of a lot more of a raise coming now with these hyperscalers. All right, so a little bit of a issue there. Our model, which I'm excited to show later today, so this is for Alphabet specifically, but right on that raise, ironically, we actually got a sell signal here to finally step aside out of Google. It's been a great trade since the lows, but finally we hit that exit door. We'll talk more about this as we move into the market environment later on. Number two of why this week was more painful is Broadcom. Now, Broadcom's numbers were spectacular. Profit, you know, everything was good. What did they not do, though? They did not boost their outlook into the future. They did not raise as much as Wall Street wanted, and that's how hungry that this market is in some of these stocks that have run quite a bit for more growth, for higher and higher and higher. I would argue that this is actually a good thing, though. This is what fundamentally keeps the market from being the quote-unquote bubble that a lot of folks are labeling it as. Corrections like this, you know, stocks going down, resetting expectations, this is actually a healthy thing. But of course, if you're a Broadcom shareholder, it's not pleasant and you don't like to hear these, well, that's nice for the market, but my stock just dropped 14%. So Broadcom, again, nice big run to the upside. Now it's cooling off. It's resetting expectations, kind of churning through some of the hot money, and those momentum traders, probably a good thing. Of course, now SpaceX. This is the big elephant in the room. Nobody can stop talking about it. SpaceX is an interesting one here because, in my view, there's kind of two types of investors or traders that are looking at this. You've got perhaps the more experienced folks that are looking at this as a liquidity event that could mark the top for the market, right? Largest company ever, hitting the secondary markets. This is a dump on retail. This is, you know, all the hallmarks of a market that's gone up, concentrated, and boom, here we go. Wouldn't this be poetic? So you've got those folks that were probably, you know, selling out of everything this week, saying, okay, I got to get out right before the SpaceX IPO. That's going to be the top. And then you have a lot of, frankly, retail, but just general interest in wanting these shares. You have a lot of folks, and it's never been easier to get this pre-IPO allocation to a company that we have ever seen than SpaceX, Robinhood, and right down the list. There's a ton of different ways to get access, to get a buy-in here before SpaceX gets public. You are naturally going to have to sell down some other things or choose to sell winners, and you're going to probably take them out of semiconductors and other things to get those allocations, and you're probably getting them now, or you're freeing up the funds for it. And so the point is you kind of have these two different opinions on, yes, I want into SpaceX, so I need to sell other things. And then you have the other group, which is like, no, I think this is going to be a top. I'm just going to sell everything down to cash. And both of those, could help explain as a factor some of the selling that we saw this week. All right. Jobs numbers on Friday. So this was, again, another catalyst, strong number. Again, good on the surface, job market finding its footing. But now when you look at expectations of what the Fed might do, we are now pricing in, once again, a raise by December, right? So this is all the yin and yang. That's what the market's grappling with. Here's the 10-year treasury on the weekly time frame making another run at this trend line, this consolidation that we've been in for a few years now. So all of these factors together can give you that explanation of why the market was down this week. But frankly, I like this one the best. We were up 9 weeks in a row. This makes sense to just have a down week. All right, so let's talk about some more. Semiconductors, SMH. This is what happens, and this is what it looks like when everyone rushes for the exit door at the same time. As we know, and we've been talking about, this is the, I don't want to say the only leadership in this market, but it's certainly been strong arming the market higher. And you just saw one of the heaviest volume daily bars here. This was taken actually probably 20 minutes, 30 minutes before the close. So it might have been the heaviest volume we've seen all year, and down 9%. If we take a look here at just the daily return. So this is a 10-year view. So there's a lot going on here. This was the daily return of the SMH. And so basically just look left and look for any dots that are below this reading. And you effectively don't see too many. You have right in here, these dots, which were COVID. And then you had a little bit here. This, I think, was DeepSeek. And then maybe tariffs here. So what we're basically saying is in the last 10 years, semiconductors just saw top 5 worst days on a single day. All right. You could go back and track what happens those next few occurrences. I didn't do that exercise, but yeah, one could take the next step there. Let's take a trip down memory lane. So this is where I think it's interesting. Is this the top in the market? This is 2025. This is not today's chart. This is 2025. Notice the date. It's in October of last year. This was what the Qs did on whatever this particular date was. Down 3.5%, an absolutely terrible looking candle. And you know what? It occurs to me. All right, we're going to have to go look this up later. I didn't actually put in the follow up here. This was not the top. All right. Spoiler alert. What we basically did here was consolidate, and then we went up. Let's look at today's session. This is not quite the same, but you still have a market that's been in an uptrend, and then you just get smacked in the face with a massive session down here. And so we ask ourselves, is this the top? It does not have to be, but there are signs. We're going to talk about more of that as we get into the second half. So our sponsor of this episode, if you made it this far, is Investors Business Daily. 2 links in the description of the show. Get yourself a discount. IBD Digital, Market Surge. I use them both every day. Check them out once you get done watching. All right, let's take a look at the numbers real quick. Oil, biggest winner. Dow Jones not faring too bad this week. Down just slightly. Gold got hammered. Qs got hammered. Russell got hammered. S&P basically down and to the right. Volatility up and to the right. Take a look at this bar here on VIX. Last week we were saying, hey, VIX is almost at a yearly low close. Hedges are cheap. Now they're not so cheap. Dollar index to the moon here. So this is one of the biggest beneficiaries after Friday or during Friday jobs report. Flee into the dollars. And here we go. 10-year treasury yield making another run. Didn't take out the highs from 2 weeks ago, but it looks like it's going to attempt to go back up there and retest. And that will be an interesting outcome. Sectors this week, energy was the best performer, followed by healthcare and real estate. Surprisingly, financials starting to act a little bit better as well. 52-week highs and lows, really not a whole lot has changed. I mean, ironically, you actually are getting a move back up towards the 100 level in 52-week highs, mildly encouraging, but new lows are still almost the same. This does not include Friday's data, which I would expect an uptick in the number of stocks hitting 52-week lows. Percentage of stocks above a 20 SMA, surprisingly, was on the way up. This is of Thursday. And then put to call ratio nice and low before Thursday or before Friday. So we'll see how that shakes out. Bitcoin. Oh boy, Bitcoin. We're going to talk about this in the second half of the video, so I'm not going to say too much about it here. In terms of econ events, it's a pretty light week. I mean, there's some inflation data coming out next week, but generally speaking, I think a lot of folks are just going to be positioning ahead of SpaceX. That's going to be all the talk, I think, on the wire. And with that, let's get into some charts. All right, so before I forget, because I know I will if I proceed normally here, this was that October snapshot I showed you, right? So this is from October of 2025. So you had this horrendous, loud, heavy volume, heaviest that we've seen in the Qs, down 3.5%. And notice what happened, and this was a Friday, right? This was Friday, October 10th. And notice what happened the next day. On Monday, we had a gap up inside day, chopped around, chop, 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 and then we ultimately resumed the trend higher. Okay, so I'm not saying that's going to be the case, obviously, and I'm not making a strong arm case to say that I even believe that this isn't the top, because I do think it's, much more dicey, but the trend is still very much intact on multiple metrics. We're going to need to see proof, right? I think that's the bottom line here. So this is a horrible Friday candle. This is coming after a fast move up though, right? And so a swift move down. Let's see if there's follow through. Let's see how the market digests. And then of course, into the end of the week is going to be the most important thing. As we're on the topic of market environment, I want to bring you to the new market environment dashboard on our website. So currently, this is updated as of Friday, except for not market internals yet, but we are still our market state here in the excellent swing environment. Okay, we made some updates to this algorithm that's tracking the state of the market. And you can see that we are still in this bullish phase here that started off in April. Now, again, Friday's data was terrible, or Friday's session here was terrible. And so what I know that this algorithm is basically doing is it's taking note of Friday and it's saying like, hey, that was a very notable change of character. And now it's going to be clocking on how we follow this up very closely here next week. And this is where I would expect, if you see weakness or more selling, this is where this is going to downgrade pretty quick. Now, on the fringe, you have market internals, which have been mixed. You have selective risk on leadership. You have weak industry participation. So these three sort of supplemental views of market health have just showing some warning signs, and that they were all in place basically throughout the week. So the way we're still looking at things is, okay, we're going to take note of Friday, but you're on sort of a very tight rope, if that makes sense. Let's take a look at our sector view. So this is similar to what we would show earlier in the presentation, but I think this view actually works out a little bit better. So we have 6 of 11 sectors that are under pressure. Really, it's healthcare that's shining right now. Financials, ironically, are still pretty strong, and industrials. Everything else is starting to kind of roll over or is already leaning bearish or bearish. We've had sell signals in many of these sectors now for some time. If we scroll down here again, healthcare, take a look at how it's trying to turn its way back up now. And this is not new. This was as of a week or two ago when we kind of flipped into it. Same thing for financials. Financials have been chugging along here after finding the early lows that they settled in March. So we've been in this kind of very consolidation mode, but we have been effectively leaning bullish here in financials. And industrials again has been, we had some kind of whipsaw in here, but this is Dow Jones, where you saw it was actually flat or almost flat on the week. You're seeing that similar in the XLI. I guess while we're here, let's take a look at the Mag 7. So this is again our trend model, momentum trend model, sort of applied to the sectors, to applied to the Mag 7. And the Mag 7 are all rolling over right now. So Microsoft, we're still leaning bullish. Nvidia, we're still leaning bullish. Tesla, we're still leaning bullish, but all of these are sort of violating and starting to weaken up pretty significantly. And again, I wouldn't be surprised to see sell signals produced in more of these Mag 7 stocks. Google already produced a sell signal, and so did Amazon. Those were last week. Meta looks like, again, is going to be on the chopping block here. You can see Apple is frankly the strongest now, and it continues to be, and it's unapologetically still bullish. I think that's kind of the only one. Even Microsoft, well, not that much of a surprise. And Nvidia, I guess, is the more surprise, where we're starting to dip and roll over. So this is a new view. These signals are quite actionable here on the Mag 7. I won't run through these every single video, but this will be up on the website. It is going to be a separate tier or membership, the lower cost. If you want access to the market environment studies, you can see our industry ranks here too. And I think that's it for now. So let's look at some charts. That's kind of the way we're thinking about just generally the market environment. But if we put some price action to it, and we take a look at the SPY here. So again, you can see just the sharp decline. I think obviously as we, I think this is coming in post data. So if I put this on here, this is kind of the logical spot where we would test effectively this 3-4 day pullback that we saw. And that comes in right around 7:30. I mean, we're almost there in the after hours right now, but Monday of next week, I mean, this is what we'd be looking at, is to see, okay, if we get another down day or a down open, how do we react around this pivot low here? And we do have some open gaps we could keep our minds peeled for. So we got an open gap here at around the 720s. And then we have the big one. If we really see more of a correction here, which is when we thrusted off of the sort of Iran sort of whatever that was. Yeah, I mean, de-escalation of round one. There's been so many of them, but this would be a big pullback and a lot of pain for the market. That'd be a 13% pullback. And just to give you context, even at the depths of the war, the S&P 500, I think, was only down like 9%. Yeah, 9.7%. So if we did see a pullback, I mean, we're getting way ahead of ourselves even talking about this, but if we did get a 13% pullback, it'll probably feel like the end of the world, because if you recall, when the S&P was down 9%, we had a lot of high flying stocks that have done so well recently. They were like cut in half. There were 40, 50% corrections happening underneath the hood, while the SPY was only down 9. So that's why in this regime that we're in, this concentration regime, you do get a lot of pain inflicted on the individual stock as these indexes start to pull back. So what I'll be paying attention to is this pivot here, right around 730, maybe this gap fill, and can we keep it contained, and can we keep this market together? That would be about a 4.5% pullback in the SPY. That would be the biggest pullback since the lows in April. And if we can keep things contained going into SpaceX, and then we can start to see how everything trades, then maybe things can stay pretty innocent. For the Qs, again, you kind of have similar level here, right around 690. I mean, it's quite frankly just below price. You get a little bit of a gap fill, open gap here, and then you've got the big open gap in April. Again, it's still too early, but if the market really violates this 690, or we see a heavy day of selling on Monday, maybe the market's intention is to come back down and retest this breakout level quicker or sooner than we would expect. So we'll keep an eye on it. Lots of volume. Weekly chart, again, basically suggests we're in pullback mode here. Does not yet tell us the magnitude of this pullback. Semiconductors. So again, this is the heaviest volume traded day ever in the SMH, $12.5 billion. We did come back here and fill some gaps. Notice the support for semis would be kind of where we sold off in mid-May, so around 525. So I think semiconductors, very reasonable to fall another 7%. I know that is painful, sounds painful. That would basically give us an 18% pullback from highs. Given the fact that SMH, right, recall, broke records on the best month, the fastest rally, all of these speed runs that we did in April and May, It feels like we're just paying for it a little bit right now, and there's some medicine that we have to take. And if we, got back down into the 520s here and found support, that would be very healthy, and that would prevent a lot of the bubble talk that goes around, and that we've talked about too, right? Nothing wrong with talking about it, but prevents it from really sort of manifesting. Russell 2000, actually not too bad here structurally. There's some support down around 270 or so. Don't hate the look. It's traded differently for a lot of reasons, but financials and biotech and healthcare, there's a lot of other things in this index. So acting a little different and, perhaps a little bit better. Let's just look at some individual stocks just because they are frankly so important now. Is Micron, or again, just at the epicenter of kind of traders. Weekly chart, not the heaviest volume. Last week was heavier, but you got an outside kind of reversal printed, down 11% on the week. You're down 2 days, I guess, in a row. There's a gap here. I would expect that to get filled in this pullback. And then this is the pivot again, right around 650. So if you're looking for logical targets for MU, there's a gap fill, which would be about a 28% pullback from highs. And if we come all the way back down to the May levels, you're talking about a 40% correction. 40% correction sounds huge when you say it. Normally it is. But don't forget, that brings you back to levels a month ago. That's not like it's going to take, 2 years to pull back 40%. We're talking about a very swift correction in a concentrated name. And if MU is where there's a lot of liquidity sloshing around right now, and there is still more liquidity needed that SpaceX wants to soak up from traders and hot money, then this is an easy mark for more pullback. So again, all of these could set up wonderful buy opportunities, but it just seems like we're in pullback mode right now in these names. You could look at DRAM coming in and filling some gaps as well. So again, it's kind of all the same pullback territory. Look at those short-term levels. It doesn't have to be the end of the world. It could just be another garden variety correction. Here's the VIX, quite the hockey stick from, year-to-date lows to, what was this? 6 points higher, back above 20. So a little bit of fear coming in. Again, I think that's a good thing. Gold, sadly, under pressure heavy. Last week we talked about it potentially hammering out here. Well, that certainly didn't happen. And we can thank the dollar for that. We can thank real yields and the yield curve moves that we saw on Friday. Gold is now testing and is below the March lows. So this here looks like it's in a tough spot. Throw silver into the mix, although silver didn't quite take out the March lows, but it seems like it would want to test it pretty quick here. What else? XLV. So we talked about this as, just being a safer spot, so to speak, to hang out in. You can see that was up nicely this week. XLU is still in pullback mode, but starting to get its act together maybe. Real estate has been quite sturdy and defensive right now, acting well. And we talked about the dollar. Here's IEF treasuries, TLT. I want to talk about crypto real quick. Let me pull this up here on the side. So I got a lot of alerts set here for Bitcoin, but this was a doozy of a week. So we're looking at spot price 24/7 market. So this isn't the Monday through Friday weekly session. 16% down for Bitcoin. I mean, at the time of recording this, that's going to be, a top 5% worst week, top 3% worst week ever for Bitcoin. So that's quite the unravel here. We were just up around 74 and then all hell kind of broke loose. Now, again, I think the only sort of hopium I could provide here for Bitcoin bulls would be some type of double bottom here at 60K. Again, it's too early to say it. I'm not calling for it. I'm not saying that's what's happening, but we will take note that at the time of recording this, right, weekly chart, in fact, it's up around 61.5. We did undercut the lows here from February, and we traded for a little bit of time, I don't know, an hour or two, a couple hours in the session in the 50s. And then we kind of found a little bit of a bounce. It's a very important reference point. The chart, the damage, the pain, right? It's all very real here. So this is a very uncomfortable chart to want to buy, and I'm not suggesting anyone does, but we should be aware that if we are above this 60 and we can stay above 60 for another week or a few more days, come into Monday and Bitcoin's still over 60, you've got something of a capitulation event. A 15% down week, it's capitulation. It might not be the low, but you can't really show me 5 days down with accelerating ranges and volume picking up and not say that that's a bit of a puke there. So that, I think, is quite notable. We can look at Ethereum, which again, heavy volume, broke below the lows from February, hasn't quite recovered. There are a number of things going on. There was a major sort of exploit discovered in Zcash, and I think that's got everyone spooked. And then, throw into any other reasons of Bitcoin and crypto being effectively the source of liquidity for SpaceX as well, and all of these other things, clarity. You've got the recipe and you've got the, disappointment here, I think, right? The opportunity cost is really it. And so these are puke candles. Usually crypto, it's, you buy when it's the ugliest. Again, not recommending it, so please do your own homework. Solana, again, below. I think you're really looking at a reclaim of the February lows and a hold above them. Then you can place a stop, then you can manage risk, and that's how I would approach it. Crypto has been a very painful spot for my trading and portfolios this year. Thankfully, the trading systems are holding their weight, but the crypto portion is certainly not fun to look at. What else do I have? I think that's kind of everything. I know we went long here. Let me show you really quick how we finished out the week, which was painful. Homepage. S&P was down 2.6. Galahad was down 3%. Quant Rockets down 10%. I wrote a note to subscribers. I think this is the worst single day equal weight return for Quant Rockets that we've seen since we've traded it live. Now, that's the sad news. The good news is, for like 2 weeks straight, it was 3% up, 3% up, 3% up, 3% up, back to back to back. That can't sustain, right? Those winners where you had SOXL and MU and a lot of these stocks that are up 100% light, it's up a couple, you have to unwind those at some point and you take your medicine. This is a take the medicine type of session for us. So it was a painful sort of Friday to end the week across the board. So we can all look forward to the weekend. No new trades. I won't show any new setups today just because we've gone so long, but market environment's getting built out. And what else? That's it. I think that's it. Thanks so much for watching. Long video. Hope you did okay. Take a deep breath and prepare for next week. Should be a fun one. And review those charts. Take a look at the major tops. Think about the levels. Get a shopping list ready. All these things, eyes wide open going into next week, whether or not we find support quick or we continue to unravel. I think there's definitely opportunity here for traders. That is for certain. So have a great weekend. We'll see you back here next video.